So the PSE recent support of 6.6 presses on quite a bit of technical concern to me. And we have to be very watchful of our next level of support. There's 6,400 being a minor support and 6,250 being a major support. However, I would like to see 6.4 hold, because if we can see the market hold above 6.4 and recover, then that means the consolidating type of correction is still intact, and we can still rely on the DAX model to keep us going and eventually seeing a much more formidable advance into the market. Now, if we go into a deeper reaction and we do hit the 6,250 and that engages a full length C wave, I think after that, you'll probably see a nice recovery anyway. And that might be an area that you also may be able to put in an entry spot for some of the stocks that we talked about. Now, the US market doesn't seem to be of a concern as of right now. I'll only be concerned, like I said earlier, if I see the 20 or 50-day EMA start to break, but right now they're far from that. So far so good, and they seem to be relatively buoyant and encouraging other markets to be able to climb as well. Furthermore, the US bonds, as I pointed out earlier, look short-term topish type of signals, and I hope that that can actually flatten or not go down, because a pullback into bond yields, I think, could help many markets try to be able to stagger back, so to speak, rather than the weakness we've been seeing of the threat of inflation and interest rates. And of course, the end of a C wave, in case we do see the 6,250 area. I know it may look scary to you, but remember, we've fallen down a little bit already, and it will engender an oversold condition in the market, and that itself will push the market up into a recovery streak. That might give you a short-term opportunity. And right now, while we are in a corrective environment, we have to take the market with whatever opportunities we can. Later on, when that index, when the 50-day or the 20-day moving average of our index is broken at the top side, that will engender a better buying opportunity for you. And that should be able to allow you to be much more broad in your ability to pick our market. And I'm almost sure that maybe about 20 or 25 of the index stocks alone should be able to lead up to good rallies if that particular phenomenon comes in. Plus, of course, you've got secondary and tertiary stocks, which may also follow suit. As you can see, our recent activity in the market has been concentrating on non-index stocks, and I'm sure that you'll see probably a likes of some of these things try to make recoveries as well. But later, let's just make sure you understand that some of these smaller speculative stocks are a bit dangerous. So you have to know what you're getting into, especially when you're attempting to be able to trade these kinds of issues. So know what your risks are when you come and deal with these particular stocks. I hope that everybody can actually be more clear that I am a bit more defensive right now because of the support break, although I'm a little hopeful that the support areas can hold, and I hope that they do, so they can provide us an interim rally opportunity that many of us traders can take advantage of. So with that, thank you very much.